Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden truths buried in corporate filings. In this video, we are going to dive deep into the latest quarterly report from PropTech Acquisitions. This is a company that is constantly trying to find its next big move, so we will see if they are getting closer to finding that perfect deal, or if they are just spinning their wheels. Before we jump in, make sure you are subscribed and hit that notification bell so you do not miss out on any of our future deep dives. Also, if you want to connect with a community of fellow corporate finance enthusiasts, join our Discord server linked in the description below. Alright, let's start by looking at the company's financial position as of the 30th of June 2025. It appears that total assets stand at approximately $5.7 million. Now that might sound like a lot of money, but when we look at the liabilities, we see something interesting. Their accounts payable and accrued expenses have jumped significantly from about $1.8 million to over $3.3 million. This signals potential financial strain. Digging a bit deeper into liabilities, we see that the company has over $4.7 million in total current liabilities. This is a huge chunk of their total assets. This means they owe a lot of money that needs to be paid back relatively soon. Now here is a really crucial point for a company like this. Class A ordinary shares subject to possible redemption are a big deal. These are shares that can be cashed out by their holders at any time, and as of the 30th of June 2025, there were nearly 500,000 of these shares valued at over $5.6 million. This is almost all of their assets dedicated to these potentially redeemable shares. This really highlights the uncertainty of their financial situation, as they do not know how many of these shares will be redeemed when a business combination is near. Let's now look at the company's performance over the last few months. For the 3 months ending the 30th of June 2025, the company reported a net loss of over $1.2 million. This is a pretty substantial loss when you consider that they are not actually operating a business yet. They are essentially a shell company looking for a merger. This loss is primarily driven by operating costs, which were over $1 million for this quarter alone. On top of that, they had a non-redemption agreement expense of over $223,000. This expense relates to agreements made with investors to not redeem their shares in exchange for other benefits, which is a significant cost. If we look at the same period in the previous year, 2024, the company actually reported a net income of over $235,000. This swing from profit to a substantial loss in just 1 year shows how volatile their financial situation can be. The income in 2024 was largely due to trust dividend income, which means interest earned on money they held in trust. Looking at the changes in shareholder equity, we can see the accumulation of losses. As of the 30th of June 2025, the total shareholders deficit stands at nearly $4.8 million. This is a significant negative equity position. This deficit is largely made up of accumulated losses which have grown considerably. For instance, the accumulated deficit as of the 30th of June 2025 was over $17 million. This shows that the company has spent a lot more money than it has brought in over its lifetime. The net loss for the 6 months ended the 30th of June 2025 was over $1.9 million. This loss is a direct result of the ongoing expenses associated with being a public company and searching for a business combination. Now for cash flows. For the 6 months ended the 30th of June 2025, the company used over $269,000 in operating activities. This is expected as they are not generating revenue. The main component here is the net loss of nearly $2 million. Interestingly, in cash flows from investing activities, we see a positive number of over $250,000. This is related to cash withdrawn from the trust account in connection with redemptions. In financing activities, they had a net cash provided by financing activities of about $19,000. This was made up of proceeds from a related party promissory note and redemptions of Class A ordinary shares. So what is going on with PropTech Acquisitions? Basically, they are a special purpose acquisition company, or SPAC. Their entire purpose is to find another company to merge with. They raised money through an IPO and put most of it into a trust account so that investors could get their money back if a deal wasn't found. The company has had some significant setbacks. In February 2024, they were delisted from the New York Stock Exchange. This happened because they failed to complete a business combination within the required time frame. This is a major blow as it makes it harder to trade their shares and can scare off potential investors and partners. The money in their trust account is supposed to be safe for investors. However, it can become subject to creditor claims if the company goes under. As of the 30th of June 2025, the trust account had about $5.7 million in it. That money is crucial because it is essentially the company's fallback if they do not find a deal. Now for the most important news, on the 2nd of July 2025, PropTech Acquisitions entered into a business combination agreement. This means they finally found a target company to merge with. The deal involves merging with a company that will operate under the name Cango Rare Earths Limited and is expected to trade on NASDAQ. This is a big deal as it could be the lifeline the company needs. To help facilitate this deal, they have engaged Jet Capital as a financial advisor. It looks like Jet Capital stands to make a significant amount of money through this business combination and any future offerings by Cango. This signals a strong belief in the potential success of this merger. Let's briefly touch on the shareholder structure. They have Class B ordinary shares which are held by insiders and Class A shares which are the ones typically owned by the public. The Class B shares are convertible into Class A shares upon a business combination. This structure is common for SPACs. The company also has warrants. These are essentially options to buy more shares at a set price in the future. Public warrants can be redeemed under certain conditions and could expire worthless if a business combination isn't completed. This adds another layer of financial complexity. A key takeaway from management's discussion is the acknowledgement of a material weakness in internal controls. Specifically, they mention issues with accounting for complex financial instruments and review procedures. This means their financial reporting is not as robust as it should be. While they are working on fixing this, it does raise concerns about the accuracy and reliability of their financial statements. So what is the story here? Crown PropTech Acquisitions has been in a holding pattern for a long time. They faced delisting and significant financial losses. However, the recent business combination agreement with Cango Rare Earths Limited is a potential game changer. This could be the move that saves them and provides a path forward. On the flip side, the company's financial position remains very precarious. The substantial shareholders deficit and the large amount of redeemable shares highlight the risks involved. The delisting from the NYSE is a serious red flag, suggesting they have struggled to meet regulatory and market expectations. The acknowledged weakness in internal controls also adds to the concern. Ultimately, the success of Crown PropTech Acquisitions now hinges entirely on the successful completion of this merger with Cango. If this deal falls through, the company could face dissolution and investors could lose their money. The future direction of the company is completely tied to this single event. What do you think about this deal and the future of Crown PropTech Acquisitions? Let us know your thoughts in the comments below. If you found this analysis helpful, please give this video a thumbs up and subscribe for more. And do not forget to join our Discord community for more in-depth discussions. Thanks for watching, and we will see you in the next video.